of one nation by another, and so on. But in Kenya, invasion stands for so much more. It represents information sharing, stylish entertainment, classic communication, and the X factor that makes you want more for the next day. So, from Mondays to Fridays, between 12 and 3, feel free to invade my space. All you have to do is to download the Camera app, and you're most welcome to join me or pay your command Z on a fantastic journey of radio. The invasion, only on here, definitely see you there.
Moment of truth.
What you just said is one of the most insanely idiotic things I've ever heard. At no point in your rambling, incoherent response were you even close to anything that could be considered a rational thought. Everyone in this room is now dumber for having listened to it. I award you no points, and may God have mercy on your soul.
Moment of truth.
Oh man, listen, 25 minutes now before 12, and of course, time for us to get the facts about tax. Faniswa Mavuso in the building from the Tax Cafe, joining us to give us information today about provisional tax. What is that?
It's easy to think that it's another tax, but fortunately,
it's still there.
I say fortunately with a pinch of salt.
Oh, here we go.
Fortunately, it's not another tax. It's just a form of payment.
Okay.
Much the same as an individual would have pay-as-you-earn deducted off their salary.
Yeah.
A company would have to pay over provisional tax. And that is what we are getting into today.
I think it's going to take us a bit, so let's get into it.
Yes. So I've posed my whole session today to answer a couple of questions.
Right.
The first is, what is a provisional taxpayer? So you'll remember through our sessions last year, we spoke extensively about individuals and how their tax gets deducted from their salary.
Yes.
Now,
Automatically.
Yes. Last week we introduced the topic about companies, and with the company, a company is not employed anywhere. A company is a company, and we spoke about private companies that are registered with the CIPC being persons in their own right.
Yeah.
So a company being a person needs to pay tax, but who then deducts that tax for that company? It is then the company is then obligated to make prepayments to SARS in an effort to sort of reduce the ultimate tax liability. Because remember, tax is an annual event.
How do you pay tax in advance?
Through provisional tax payments and through the pay-as-you-earn.
Okay.
Remember, tax is a once-a-year thing. That's what it actually is. We individuals that are employed, we pay it every month. You see growth every month on your payslip, but it's actually going towards that once-a-year payment.
The annual contribution.
The annual contribution.
Got you.
So the same with a company. A company would need to make some sort of prepayments towards that annual contribution. So that is what, in a nutshell, what provisional tax is.
I see.
But there's obviously parameters which need to guide how you calculate provisional tax, who pays for the provisional tax, and that's what we're getting into.
Okay.
And then the second question I want to answer is, what is a provisional tax return and what are provisional tax payments? So any payment made to SARS needs to be accompanied by a return. While you can actually physically go and make a payment to SARS because you will have a tax number which you would use as a reference,
yes,
it is discouraged because a couple of years ago, what was the norm is persons that are involved in illegal activities would clean their money by making large deposits into SARS and then demanding that money back as refunds.
That's pretty clever.
It used to happen. So
we do not condone any such money laundering or fraud activities here on Moment of Truth, nor does KPSC Radio or the Tax Cafe.
Or the Tax Cafe. Or SARS, which is why then they came up with this idea of if you make a payment into SARS where no payment was due, you then need to substantiate. It's a whole lengthy process.
Like why you're just making a
to
random
get your money
large.
Yes.
Okay, got you.
So I've actually got a very interesting client at the moment who had garnish orders against her her taxable income, and SARS was taking money off of her salary because she had a large tax debt due. It got to a point where the debt was settled, but the garnish order still went through.
Sure.
So she's now sitting with a tax account that's in credit and money is due back to her. But the process that we need to take is that we need to provide evidence of why the money was paid in the first place.
Oh dear. So you have to prove that the same garnish order that they didn't cancel when they were supposed to on their side.
So it's a whole lengthy process to sort of verify the validity of why the payment was made.
Are you sure you're not laundering money?
Yes, that would be the ultimate question. And you can imagine all of the events that are happening within SARS to try and verify the authenticity of this payment that needs to not go back.
Especially in this day and age where we are up to our neck in fraud and tax fraud and all those cases. And so, and also, the receiver of revenue has had some really, really touchy headlines around this. So basically the feelers are out for anything that might be untoward.
Yes. So they will do an extensive investigation with regards to that. So any monies that are paid into SARS must be accompanied by a return.
Yeah.
So when you make your provisional tax payment, you need to then accompany that with a provisional tax return, which will detail the details of your business transactions and the reason why you are making this payment.
That amount.
You made X amount of income, you had this amount of expenses, this is the profit that needs to be taxed, and this is your provisional tax calculation, and then you make that exact amount.
Got you.
Yes. So when is the next question that I want to answer is, when is the tax return and the payment due? Now we're talking about companies, which is vastly different from individuals.
Right.
Remember, individuals have a March to February year end for every individual, and their tax filing season is July to November. That's standard for every individual. But when it comes to companies, they're not constricted to those timelines.
So there's a staggering.
Not even a staggering. It's more linked to the company's financial year end.
Okay.
Yes. So the timelines for the submission of a company tax return is linked to the company's financial year end. So if you've got a September year end, your annual return would be due in September. If you've got a June year end, etc., etc. So your annual return would then be due in at the end of the financial year.
Okay.
When it comes to provisional taxes, because provisional taxes are prepayment, this obviously needs to happen before the annual tax return submission. So looking at, use a simple example of a company that has a December year end. So if you've got a company that's got a December year end, the first provisional tax return is due 6 months into the financial year. So you start the first day of trading is the 1st of January.
Yeah.
The provisional tax return is due on the 30th of June. That's the first prepayment, is due on the 30th of June. So if we're looking at the year 2022, for example, you would have started trading on the 1st of January, you're trading all the way up to the end of June, you make your first provisional tax return submission and payment on the 30th of June. And then a second provisional return is due at the end of December, so at your financial year end. But then the annual tax return itself is only due a year later. Because if you're looking at a business that's running and trading throughout the whole year, it will be trading until the last business day on the 31st of December. You can't then submit your final annual tax return on that same day.
Sure.
Say you're running a business that closes shop at 9 p.m.
And you're operating that day.
And you're operating until 9 p.m. You don't then still have the time to finalize your books and do all the checks and balances that need to be done. So the annual return is due then a year later, because with the checks and balances that need to be done, the bookkeepers need to draw up the books, the accountants need to draw up the financial statements. Your company may need to be audited. So we need to provide then all of those professionals the time to do all of their work to get to the final set of financial statements that will then be the driver of calculating the final tax bill.
Okay.
Which is then filed the following year. So once again, looking at our company with the December year end, your December 2022 tax return would be due in December 2023.
How user friendly is this process, and does human error ever play a role in provisional tax going wrong?
Of course, human error is always there, because even if you hire the services of a professional who has studied this sort of thing and is doing it in practice, the fact remains that we are human, we make mistakes, we have
one extra zero somewhere and everything is off.
Yes, so it does happen. But yeah, SARS is very strict when it comes to errors. So you need to make sure that you've got some level of verification or checking or quality assurance within your organization to prepare for such eventualities. And then now I want to go and spend some time talking about the actual calculation of the provisional tax. So you are trading for 6 months, and you then need to make an estimation of how much is your tax liability going to be for the year. And if you're sitting on the 30th of June, you don't really have a feel of how the rest of the year is going to play out. And so you need to make a calculated best guess estimation, because ultimately that is what all the prepayments are, even the ones for individuals. Where your employer deducts your salary.
It's roundabout.
Yes, it's a best guess estimation because a lot of factors can come into play once you get to that place where you need to submit your annual return. So the law dictates to us that we use an amount that is called the basic amount. The basic amount is basically your profit for the last year.
Okay.
Because remember, you taxed on profit. You make your income, you deduct all your deductible expenditure, and you land at a profit figure, and that is the amount that gets taxed.
Okay.
And unlike individuals, companies are taxed at a flat rate of 28%.
There's no room to move.
So for individuals, we've got those tables where
yes.
you've got in
from 16 or from 18 to
yes, 18
okay.
to 45%. But companies are taxed at a flat rate of 28%. So whatever your profit figure is, the tax is at 28%, and that's what we need to
Got you.
So going back to the provisional taxes, then you use your profit for the previous year, you multiply that by 28%, and on that first provisional tax return, you divide that by 2, because you're going to be making 2 provisional tax payments in June and in December. So you divide that amount by 2, and that is the provisional tax amount that you pay. And then when it comes to the end of the year, when you calculate your second provisional tax payment, you perform the same exercise, but then you deduct the first payment that you've already made.
Also, okay.
And then now you're sitting at the end of the year and you've got a better idea of how the year went. So your estimation then would need to be adjusted by the events that happened in the year, because that second calculation needs to be within an 80% and 90% range of what the actual final return amount would be.
Okay.
Yeah. And of course, there are penalties if you underestimate or fail to submit, but I'll get to that.
Okay.
So I want to look at an example quickly. So say you take your last year's profit of 100,000, for example, you multiply that by 28%, you get to 28,000, divide that by 2, and that's your first provisional tax payment.
14,000 rand.
14,000 rand is what is due on the 30th of December. The 30th of June.
Yes.
And then you perform the same exercise at the end of December, but now also factoring in what might have happened. Maybe you might have gotten a massive contract that has boosted your income. perhaps business was not great in the second half of the year, and you need to adjust
That
down.
tanked downwards.
Yes.
Okay.
So
Okay.
you make those necessary adjustments. You take into account the first payment that you've made, and then you make that second payment. And then your accountants come in and they perform the financial books for the business. And then somewhere along the line, you may find that maybe you underprovided for your taxes for this year. You've got the option to make a third additional payment. This is for two reasons. When you submit your annual tax return, now a year later,
Yes.
if that percentage, remember said that estimates needs to be between 80 and 90% of accuracy. If it falls below that, you would then be liable for what we call an understatement penalty. The fact that you understated your taxes.
You're holding out on the tax man.
Yes, the tax man is now out of pocket.
Out of pocket with the tax man. That's not a good look for you.
Not at all. So in order to avoid to be in that position, you now have an understatement penalty. You've got that option to make that third additional payment, or you just want to reduce the amount you'll ultimately pay. Say you've got some spare cash and you're like, okay, let me make this additional payment. But then that also needs to be accompanied by a return, because SARS would need to understand why are you making a payment when no payment is due. Now the consequences of miscalculating your provisional taxes is the first one, which I've stated, is that interest or an understatement penalty may be levied.
Yes.
So you might be liable to pay a penalty because you understated.
Even if it's an honest mistake, it's one of those punishable.
It is, very unfortunate. And then the other sort of negative or disadvantage is that obviously any amounts that are not paid, so you file your return but you actually don't physically make the payment.
Yeah.
That amount that's outstanding starts to incur interest.
And there you go.
Yes.
Off you go into penalty land.
Into penalty and interest land.
Oh.
And if you fail to make the submission, the tax return submission completely, you don't submit, you don't pay, you don't do anything, stick your head in the sand.
And say it's all gonna go away.
It never goes away.
Oh.
SARS would then use their best estimates to tax
and that's not gonna be to your favor.
Not at all.
Just saying, guys, comply.
So it is quite a lot to take in, and it can get quite complex. This is one of those areas where I would encourage somebody starting out a business to hire the services of a professional, because it can get quite complicated. Because you come into a business thinking like an individual.
Yeah.
It's one return once a year, and you don't realize that there are actually, in fact, these provisional returns that you need to have been making.
Yes.
And then you sit at the end of the year, you want to file your annual return for your business, and then there's a huge penalty.
And you run into that penalty right there.
Yes. And it's not pretty. So this is one of the areas where I would encourage business owners to seek out the help of professionals as early as possible. Yeah.
And I mean, a journey with a professional will, especially as a business person, would always that person also acts as an advisor.
Yes, definitely.
Not just on the things that you say. So I need help with provisional tax. It becomes a journey of, so this is how we weave this together, the timing of different things.
Yes.
I see that we might run into trouble here. And you get to foresee things as well.
Yes, that's correct. And that is my approach with my clients as well. I don't just take at face value what you're saying to me, because while you might have a bit of background of what you're talking about, I love the education element, which is why I love coming here on Wednesday. I love the education element, even with my one-on-one clients, for you to walk out you came in equipped with your Google search or wherever you got the information, but then you walk out with something else that accompanies that information that you came in with.
I see. Her name is Faniswa Mavuso, and she is from the Tax Cafe. How did they get in touch with you?
You can contact me telephonically on 061-874-2546, via email on info@thetaxcafe.co.za, or social media platforms. I am the Tax Cafe.
And on that note, we end our Wednesday's Fact About Tax. She's here every Wednesday with us. We're biting this elephant, we're chowing this elephant one bite at a time.
Yeah.
And also, we will also start making some case studies as well. Examples, if they'll let us, some of the people that you've worked with. Maybe we won't use names, but
Yes,
definite
yes.
Situations, especially those that got a bit sticky.
Yes. There's actually plenty of case studies without even invading the privacy of my
Yes.
clients. Plenty of case studies
That-
in tax law that we can even explore.
Fantastic. And that's where we ended today. You could have been anywhere between 9 and 12, but this is where you chose to be. And for that, we are eternally grateful. Thank you for making Moment of Truth your 9 to 12 destination. Until tomorrow, which is Thursday, because this week has just disappeared.
Yeah.
Take care of yourselves so that you can take care of each other. Peace.